But what does Fed signal for equity markets globally? Let's welcome on board Ed Yardeni as well and get in his opinion. Ed, hi, good morning. Good to have you on the show, and good evening to you, actually.
Thank you.
But just wanted to understand, what is it that you've made of the Fed commentary? I guess pretty much in expected lines. A September rate cut is what everyone was penciling in any case.
Yeah, well, it was definitely dovish. The Fed chairman has been quite dovish over the past several weeks. The previous press conference was also dovish, and basically he confirmed what the market anticipates, that there will probably be a 25 basis point rate cut in September if inflation continues to moderate. And between now and the September meeting, there'll be two more CPI inflation numbers, and they should moderate. But I think we may get a even more dovish statement from him in late August when he goes and meets at the annual conference over by the mountains.
Yet if the Fed for the first time is actually sounding reasonably confident on where inflation is headed, growth is not that bad. So what is, in a sense, stopping them from giving a clear-cut guidance on the glide path? I mean, they could have been more aggressive and perhaps thrown in words like the cycle has started. They could have used words like, okay, aggressive rate cuts are coming. If the data is so strong, is Fed being conservative or they being safe?
Well, look, there's really no rush for them to lower interest rates. The economy is doing fine. The labor markets, as the Fed chair said a few times, the labor market is normalizing. So he's not characterizing the labor market as weakening. He just says that after the pandemic, when it was extremely tight, that is normalizing. And that doesn't necessarily mean that they've got to rush to lower interest rates to avoid a recession. And so I think that the Fed is going to do what the Fed's going to do, and you just got to stay the course with what they're saying. So far, they've been very predictable.
So, yet something which perhaps could be important for our Indian audience, and historically, emerging markets have seen inflows when the Fed rate peaks out. Are we in for a repeat of that? Because now appears that Fed rates have peaked out. Are we in for a reversal of flows back from developed markets to emerging markets?
Well, generally speaking, emerging markets are viewed as an asset class, but I think that notion has to be reconsidered. I mean, clearly, for example, India has done a lot better than China, as we've seen over the past few years, and a lot of emerging markets like Brazil, are very tied to commodity markets, and commodity markets have been very weak. So I think that we can't generalize anymore about emerging markets as an asset class. I think we have to kind of go country by country and pick our favorites and recognize where the challenges might be for some other countries.
Appreciate your time, Ed. Thank you for joining in and sharing with us your perspective on the move taken by the US Fed and what the outlook is for those markets.